Looking to that commodity space more broadly, though, and swelling stockpiles and record US crude production insulating the world's largest economy from geopolitical turmoil. Let's get the latest. Peter McGuire from XM joins us live from our Sydney CBD studio. Peter, great to have you on the program. Thank you so much for joining us today. Let's start with the oil price, because we have seen a little bit of weakness in the oil price over the past couple of sessions. What do you make of some of the dynamics that are playing into this volatility, you could say, in the oil price?
Well, good afternoon, Ingrid. I think a couple of things. First off, there was probably some profit taking. Understanding also you've had that strong push as far as US dollar over the last matter of a month or two. It's been very, very solid, and it's taken up that crude price also. And in turn, we had the hurricane issues last week. You had the Saudi situation over the weekend with Khashoggi and so on, and that created a little bit of unsettling. I think it's probably just going to oscillate between these sort of numbers at the moment, a little bit of range bound, and I'm not suggesting you're going to see anything, massive to break out.
I mean, in terms of US President Donald Trump, he often has a lot to say about the oil price, but also about factors that contribute to the oil price. Now he's weighing in, obviously, on the Saudi Arabia and, as you mentioned, Khashoggi, which is very much in focus at the moment. How does that play out for the oil price, do you think, in the medium term, until it's, well, somewhat resolved, I guess? Well,
it depends on what stance the US takes, and of course Saudi Arabia. If it's if it seems to be it settles down over the next 24 to 36 hours, then it looks as though that may be the course of events. I've just been watching news over the last 12 hours or so, and Pompeo's over there, and just talks. It seems to be that Saudi Arabia is going to, move away from it. Though, let's wait and see what happens as far as the Turkish investigations in Istanbul. So it's just a little bit of a wait and see. If it was to flare up, naturally there could be, a large price spike. But at the present, I think it's going to be fairly well contained from a geopolitical and the sensitivities attached to it.
Speaking of the US president, he's also been obviously talking a lot about bringing oil prices down. Iran's oil minister has weighed in, basically saying that he can't bring the oil price down with threats. Probably an accurate comment.
Well, in some ways it is, but remembering that, as far as the US is concerned, and they're very much aware that, if you look at a global consensus, as far as most analysts, I think 85 or 86% are saying that things are looking relatively bearish moving forward. The crude price has been a very strong uptick. We're all understanding it's up 50% or so in the last 13 or 14 months, and that does crimp, spending power from consumers all the way, all over the world. And that's a bit of a, as far as President Trump's concerned, only the oil producers are the ones that are beneficiaries of this. Regarding, US crude, or US shale, he probably ropes those guys in as well.
Where do you stand, Peter, on the oil debate, just where the oil price is going? Because some say, look, it's probably not going to go much further than the range it's in right now, but others, of course, have been calling for that $100 a barrel, that psychological level. Where do you see it heading, and what are some of the catalysts for oil going forward? I
think possibly you'll probably see it. Well, first off, the major meeting, I should probably make reference to that, the 6th of December OPEC meeting in Vienna. I think it'll probably trend higher, and a couple of reasons why. First off, you've got the Northern Hemisphere winter. Secondly, you've got that unknown as far as the geopolitical and the sanctions as far as Iran, Venezuela and so on, and those moving parts. Necessarily, if you do see the US dollar ramp up even further from here with projected rate rises and so on, I think that's going to take crude up also with it. And I think that there's enough movement to the upside. I don't necessarily think you're going to see a contraction in prices in the short term, and that takes us up to really, that December number, and that's, the best part of, 7 weeks away, 6.5 to 7 weeks, and I think they'll probably trend higher from here.
Watching gold, I don't know how closely you watch gold, Peter, but it's hard to ignore it with sort of the geopolitical situations, the macro risk that we know is going on globally at the moment, trade wars and things like that. But it hasn't had a huge impact on gold. It certainly hasn't been seen as a safe haven, except maybe a couple of days last week where we saw that huge volatility on markets. Why do you think that is, and what are the drivers of gold at the moment?
Well, you haven't seen US dollar come off. The stock markets have rebounded in the last couple of days from that, last week's washout. We're all very conscious of that. The Dow was well up, bid up. Technology was bid up, and so I think that's probably put a little bit of a flat line to gold. But it's sitting there and it's had its move up, bit of profit taking, and I think it'll probably edge higher from here. A couple of things. First off is the uncertainty. Secondly, the risk side of the market. And thirdly, you know, traders look for other opportunities. Gold was a great trade there for a couple of days, ramped up strongly, profit taking, and now you're looking at other markets. And, you know, the equities has been a game back on sort of thing over the last 24 to 36 hours, and it's taken a little bit of heat out of it. But I'm not suggesting that's going to stop.
In terms of the washout that you just spoke about with markets, with global markets that we saw last week, do you expect more of that going forward? I mean, how are you tracking volatility at the moment in global markets? Because we were complacent for many months.
Well, we were. You had a look at the VIX. It was up, you know, the best part, I think, 70% there for a couple of days, for 14s to 23s, 24s. You know, I think you're probably going to see a continuation of these big volatility swings. And any market, if you look back on since Trump's inauguration, and not even 2 years in, it's up about 31, 32% the Dow, S&P similar numbers. So you've only got to say, well, they're big, big moves considering where you're looking at interest rates and, of course, inflation. So don't be surprised to see a washout of 5 to 10%, and then all of a sudden it'll retrace, it'll have, you know, a correction, and then it'll go up again. I think it's just going to be a normal course of events leading into 19. I think 19 will be a fairly volatile year for many reasons.
Yeah, lots to watch, Peter. We'll leave it there with you, but appreciate your time on the program. Thank you very much.
Thank you, Ingrid.
Peter McGuire there from XM, joining us live out of Sydney.